What's up, everyone? Hope everyone had a good week, spent lots of time with your family, stayed away from others, washed our hands a lot, and we're going to jump straight into it. Dow Jones up almost 13%, going from 19,174 to 21,637. NASDAQ going from 68.79 and a half to 75.02 and roughly a half, up 9.1%. You'll notice that the Dow beat the NASDAQ by a lot this week. It's primarily because Boeing went from about $90 a share to over $170 at one point. Saving the S&P 500 for last again this week. As you can see, it's up 10.3%, going from 23.05, we'll call it, to 25.41. And because we made a decent bottom, or I should say because we're up significantly from Monday's low, we can kind of redraw some new Fibonacci levels here to help us try to figure out where the market is going next. As always, Fibonacci levels, the technical level that we use when we have no idea what the fundamentals are. And since we don't know what earnings will be and how long we'll be all locked down for, we have no idea what the fundamentals are. So you got to look at technicals. So using the 30-day 2 retracement from the peak to the trough over the past month, we have 2650 as the next level. It looks like we pushed up pretty close to it on Thursday and Friday and potentially failed, but we kind of closed straight at the February 2018 low. So definitely be interesting to see where the market goes on Monday and next week. Now, if we were to continue going up, the next level will be the 50% retracement. A huge level for most traders. That's at about 2790. We'll call it 2800. So definitely something to look for. It honestly wouldn't be the worst thing in the world to see us trade between that 2350 December 2018 low and the 2550 February 2018 low. We really want stability in the markets more than anything else right now, rather than these giant moves, a huge elevated VIX, making it impossible to really hedge anyone's portfolio. So why exactly did we bounce so hard this week, and what's going to drive where we go on the charts at these Fibonacci levels? I believe that the market is heavily headline driven right now. Some of the positive headlines we had this week were President Trump said that he hopes to have the U.S. open by Easter. Now, although most people don't think that's a realistic date, this allows some people to plug a date into their models for when the economy will start again and probably gradually start ramping back up to where it was before. Again, probably not an accurate model, but it's a place that we didn't have before. Of course, we could have a extension of stay-at-home orders. That would be a negative headline next week that would drive us down lower. As you can see here, for every single positive headline, there's kind of like a negative side to it. We had Italy seemingly peaking this week in terms of their number of cases for the first 2 days, but then those cases increased again, so maybe they aren't at the peak. And we're seeing some increased cases in China and Europe as well. Again, China, they claim most of these are imported cases of people traveling back to the country. Europe is a mess right now. And Florida is kind of a new concern, as we have a bunch of New Yorkers running away from their stay-at-home guidelines up there and coming to Florida, where they're just kind of roaming free, claiming they're fine. We also had the stimulus bill signed into play. Definitely $2.2 trillion, a lot of money, but we'll see how smoothly the issuing of those checks goes. Supposed to go straight into your bank account, but whether that happens as smoothly as that or not, we will find out. The Fed also injecting a ridiculous amount of money to help with the liquidity issue. But on the opposite side, we have some bankruptcies and some hedge funds going out of business, and maybe a few oil companies are next. Oil is a whole separate issue, but I can definitely see more bankruptcies before this whole thing is over. I think the biggest driver for the rally this week is month and quarter end rebalancing. A lot of these big mutual funds that need to maintain a certain percentage of stock holdings in their portfolio, when their stocks go down, it just means they have to buy more to maintain that target level that they want to have in their portfolios. Big fund managers are buying. We have Jeff Gundlach saying that he's covered all of his shorts for the first time in a very long time. On the opposite end, we have Scott Minerd at Guggenheim, who's saying that we could definitely test lower. He's looking for something like 1,700 on the S&P. I don't know how reliable Minerd is compared to Gundlach. Gundlach, from my point of view, is correct a lot more. Minerd, just in January, as you'll see in the link below, said that asset prices keep going up. This is the same as Ray Dalio calling cash trash probably like 2 weeks before the market peaked and completely crashed. Also, the last bullet point here, Remdesivir actually we should be seeing some results from clinical trials in China early this month in April. And Gilead recently has actually expanded the drug use from compassionate use to expanded access, meaning doctors can order them for patients that are in intensive care. So this is probably a good sign that the drug is being used more widespread. I'm hoping that the drug can shorten hospital stays for most people. And honestly, that's the biggest issue now, just having hospital space. But if Remdesivir comes back from the clinical trials as a fail, or the FDA doesn't approve them, then that's really going to drive us down lower on the S&P, and we'll be wanting to watch that 2350 level again on the index. Now, how do we trade a market that moves as crazy as we've been moving? I mean, we were down. This is the fastest recession in the history of the market, and then this week we had just a massive bounce back. You'll see here there's a list of stocks I recommended on last week's video, and the percentage gain that we've had on some of these in just 1 week. So it's tough to trade this kind of market, but for me, anytime I have a 10% gain or more, as we can see on Procter Gamble here, Apple, Starbucks up huge, and Microsoft, I would put a stop limit order or like a trailing stop under these. In my opinion, the markets, I don't care how oversold we were, should not be bouncing up as quickly as this, so we can definitely get back to those entry levels that we saw Monday for every single one of these stocks. Kimberly-Clark, Facebook, and Target, I don't think those 4 and 5% gains are big enough, so I would just be holding on to those, and if we drop, just add more at those levels that I pointed out last week. So that's where we are with those recommendations. I think this is pretty good for a 1 week performance, but like I said, just be careful of where you go here. So concluding with our fun news for the week, and this is more just interesting and crazy sounding more than fun, but a cathedral in Germany has dug out the relics of Saint Corona, the patron saint of resisting epidemics. Not making this up. From its treasure chamber, and is polishing up her elaborate shrine to go on show once the coronavirus pandemic has ended. Apparently, Saint Corona was a 16-year-old that was executed for her public profession of faith in Christianity, and she was killed by the Romans about 1800 years ago. The cathedral had planned on breaking out this display before the whole virus spread, but obviously now we're a little bit delayed. But they are just cleaning up the shrine of gold, bronze, and ivory that's been hidden from public view for the past 25 years, and hoping that, once it goes on display, it's going to have tons of visitors. Because, like I said, Saint Corona, the patron saint of resisting epidemics, that's like something you make up and put in a movie or something. It's just crazily coincidental. I don't even know if that's a real term I just used, but you get the point. This is weird. So thanks for tuning in, everyone. Hope you enjoyed the insight. Again, leave your comments. Hit that like button if you like what's been happening lately on these videos. All the links to my sources are below if you want to read more in depth about some of the things I covered. And again, stay safe, stay away from others, and we'll see you next week.